Let's take a look at what's going on with Dogecoin. Okay, so in yesterday's video, we were watching this uptrend like this right here. We had support, and watching this uptrend on the 4-hour time frame right now. It was testing that uptrend right here, and I was saying that if it breaks it going down or sideways, that what we want to do is look at the top and then look at the bottom. Draw these lines right here. And it looks like we're breaking the bottom right now. So in my opinion, I think that we're going to come down back down to this Fibonacci retracement level sitting at around 0.115. That's just my opinion. Let's take a look at what else is going on. Okay, so we have, and let me show you where I got that level from. So we have this big run up. And when we start heading down, I like using the Fibonacci retracement level, the Fibonacci retracement chart, drag from the bottom of the trend to the top of the run, something like that. And then that gives us some levels to watch as we go down. And I like watching these levels because they act as support, and then they also act as resistance. Resistance, support, got a bounce. So yeah, we got a bounce right here on that bottom, bounced up. So, like I said, I like watching them to trade off of. In the last couple days or whatever, I was saying that if we could break this one, this Fibonacci retracement level sitting at around 0.114, 115, then we could head up to the next one sitting at 0.139. We came up, hit the target pretty much, and this target up here, which was the previous resistance. And then it looks like we're having some trouble, or it looks like it's cooling off maybe. And it kind of looks like it's heading down. The volume's declining. So it's not 100% on this. Like if we started going down, if we started breaking to the downside and then we got red volume candles like kind of popping up, because look, the volume is declining. If we still see like declining red volume where it's like very, very little, then maybe it's not going to go that far down. But right now, like what I was saying, I watched the trend lines, I watched the top and then the bottom once it starts breaking the trend. And then if it breaks the bottom, then I get more confident on the bearish target. If it breaks the top, then I get more confident on that bullish target that I've been looking at, which was this previous resistance right here. If we zoom out, we've been looking at this falling wedge pattern, something like that. We broke it going to the upside. We hit the first target, which are, okay, so in the falling wedge patterns, the previous resistances are the targets. And we came up and hit the first target. Sometimes in these when we break out of these patterns, we come up, we hit the target, we hit the first target or the second target, and then we have to cool off before we can come back and hit the next ones. So maybe that's what we're doing right now. Like I said though, I like watching the Fibonacci retracement levels to kind of trade off of, and they usually do pretty good. So we came up, hit that level. Now it looks like we're heading down, or we broke below that level, should I say. And I don't know, I feel like the next spot that we might be coming down to is over here. Possibly. It might not make it all the way down though. So, but it does seem like we're heading in that direction. So I guess, okay, so here's another thing. If you're like new to looking at charts or whatever. So when we're heading up, we're looking at the bottoms. We're heading up, we're looking at the bottoms, we're looking at the supports. Support, the bottoms. Now, if we're heading down, we want to look at the tops, the resistances, because, okay, so when we're heading up, we want to see when it changes direction going to the downside, right? When we're heading down, we want to see the resistances to see when it breaks the resistance and it starts heading back up. So let's go ahead, and since we broke to the downside of this little channel pattern, that kind of straight pattern, let's go ahead and delete that, and then let's go ahead and delete this. We could also probably even delete the trend line that we were watching because we pretty much broke it. So let's go ahead and focus on the resistance. Since we are trending to the downside, we'll look at the tops. Okay, so let's get the trend line tool, do right there, and drag it out, something like that. So as long as we are underneath this trend line right here, something like this, then we can count on it to continue to head down. If it breaks this trend line right here, then we could do the same thing that we did over here when we looked at the top and we looked at the bottom of it. So like, let's say it starts doing something like this, going sideways. What we do is look at the top and we look at the bottom again. And if it breaks to the upside, then we can get more confident on that next target sitting at around, what was it? .173. This previous resistance lines up perfectly with that 38% level Fibonacci retracement chart, or level, should I say. And yeah, and since we're breaking this one going to the downside, then like I said, if we come up and hit the Fibonacci retracement level and then start heading down, then I think we're heading to the next one. But we'll have to wait and see. There's not a lot of volume behind it, so it might just be like a little fake out. Let's see what else we got. So yeah, I would be watching. I'm on the 4-hour time frame. I'm watching this downtrend. It's the main thing I'm watching right now. If we continue to head down to this next level, then I wouldn't be surprised. But if we start testing this downtrend and break through it, then it seems to be like a fake out. And like I said, the volume's not coming in quite yet. If we start getting big red volume candles, then we could start getting more confident on this bottom target sitting at around .114. As we're trending down, I have targets going to the downside. When we trend up, I have targets going to the upside right here. But once we start breaking the trends, then we have to switch. Like, we have to kind of live in reality and see or target the either up or down. And right now, we kind of broke that trend. It could be, like I said, it could be a little fake out. It could just dip down and then get back right into this sideways action. So let's see though. The other thing I said, the main thing that we're watching right now is this downtrend. Until we break this downtrend going to the upside or even just going sideways, then I think that we're heading down for the most part. I mean, not down, but like in the short term. If we zoom out too though, because we're still technically on an uptrend, even if we do break that, because we have support right here. Oops. Let's see, we have support right here, and support right here, giving us this uptrend like this. So we've been kind of on this uptrend as well. It could do something like this. You know what I'm saying? So until we break this uptrend going to the downside, then it's still technically in an uptrend, and we still can be this channel pattern, or this falling wedge pattern, should I say? Boom, 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 breakout, then it still could be performing something like this, or even maybe like this. We have to wait and see. I mean, it's not that perfect line though, but you can see how it's kind of like moving that, like if we had an average, kind of like, okay, so we have the 180 moving average right here going like this, and then it's starting to like kind of slowly go up like that. Let's go to the daily time frame, and speaking of moving averages, let's take a look at them. Let's see. Okay, so we could watch the daily 9 moving average. Let's go ahead and delete that 4-hour trend line right here. Okay, so we've been talking about the 9 moving averages on the channel, right? We have the 9 moving average on the daily time frame. That's like pretty much my favorite one to watch. When we break it going to the downside, we get resistance pushing us to the downside. And then we break it going up, this one right here is a better example, but like when we break it going up, we start getting support on it, we start testing it. We actually broke through it right here, but let's say right here, when we broke above it, we started touching it, getting support, bouncing to the upside, moving up. So basically right now we are above the 9 moving average, which is a good thing. Maybe we just have to come back down, test that 9 moving average, and head back to the upside. Though, I mean, on the other hand though, or the other side of the coin, should I say, whatever. If we break below this 9 moving average, like let's say, okay, so we have this blue line, this 9 moving average. If we break below that, then that's not going to be a good sign, because look what happens every time we break it. We broke below right there, boom, red candles. Let's see, even when we broke below it right here, red candles, we're having trouble breaking back above it. Basically, if we break below it, we're going to have trouble breaking through it, and it's going to take some time to break back above it. But yeah, we are above this 180 moving average though. Hopefully that comes into play, because look at how it was giving us resistance right here. We had resistance, got rejected. We came up, hit that 180 moving average, the orange line, and got rejected and started heading down. Came back, did some sideways action, got a little bounce to the upside, and then we came into contact with that 180 moving average, got rejected, and started heading down again. We found support right here, and then we started bouncing sideways, went back up, retested it, broke through it, got some nice green candles. We got those nice green candles. So what I'm kind of wondering now is, usually when we break above resistance and support, so when we break below resistance and support, if we're below it, then it acts as resistance, and when we're on top of it, it acts as support, just like we were talking about just now on the 9 moving average. So if we're above this 180 moving average, maybe we could come down, test it, and get a bounce on it instead of getting rejected on it. That's what I'm kind of thinking. I wouldn't, if we do come down here though, we will be breaking the 9 moving average, which will not be a good thing. So, I mean, not a horrible thing, but it's not, it's not ideal. We want to stay above that 9 moving average. So the other things that I'm watching on the daily time frame is this 9 moving average. Let's see if we can test this and stay above it and get support on it. We are above it now, so maybe we can count on it to act as support and bounce to the upside. The other thing that I was watching yesterday is Dogecoin to Bitcoin. Let's see where we at. Let's go to the 4-hour time frame. So we're still on this uptrend technically. Like I was telling you guys, we have support, support, support. We're heading up, so we're watching the bottoms. Then we broke the trend line going sideways. What we do after that is we look at the top, we look at the bottom. We're going sideways right now, basically. So if this chart's going up, it's good for Dogecoin. If this chart's going down, it's good for Bitcoin. But yeah, I was just talking about, we're going sideways. So until we break up or down, we don't really know which one was better. We're just basically in this little channel pattern. Once we break it going up, then we can get more bullish on Dogecoin. If we break it going down, then we can get more bullish on Bitcoin. Let's go to Bitcoin real quick and check this out. Okay, let's go to back to the daily. We did break above this channel, this resistance that we've been watching. Resistance, resistance, resistance. We broke above it, but it looks like we're coming back below it. So let's see what happens there. I was hoping that if we break up above this, we could, this cup and handle pattern, we have this cup and then we have the handle pattern could come into play. And when we have that pattern, we look at the tops right there, and then we could drag from the bottom of the cup to the top of the cup line, should I say. And then we drag this to the breakout, something like that, which gives us a target of around, let's see, I think it was like 122 or something like that, but it looks like 116. It depends on where you measure it from. I mean, if you measure it from all the way down here, let's see, let's do something like that. I think that's what you get, the 123, 122 target. But like I just said, we're not breaking out of there as much as I would like to. It looks like we're actually falling below that resistance again. If Bitcoin is not performing or it's going down, then the rest of the coins might suffer as well, because everything's tied to Bitcoin. So let's go back to this one. Let's see, what does this one look like? Okay, so yeah, let's see what happens. 4-hour time frame, I think, is the main thing to watch. Downtrend, something like this. And then if we shoot over to the daily time frame, I want to see us stay above this 9 moving average right here. Let me know what you guys are thinking though. If you guys liked the video, hit that thumbs up. If you want to watch the last video, check it out right here. And if you're new to trading, check out this playlist right here. Help you get started. All right, if you guys liked the video, hit that thumbs up, and I'll see you guys in the next one.